Today we're going to be talking about Leipzig and Porto, two great new markets that we are launching into. This is the end of the year. This is the last webinar of the year, but we're going to plan a lot of work in Portugal and Germany into 2020. And I'm just going to share a little sort of snapshot in terms of our upcoming work in Leipzig and just reflect on our recent launch in Porto, where we will plan some numerous projects thereafter. The first Porto project has been really well received, and there's a lot of interest from our clients. Okay, so let's talk a little bit about the key markets today. So Leipzig and Porto I'm going to share in a sec. Going into next year, we'll be talking about the UK as well. Obviously, we have the election coming up next year where we're hoping to get some clarity on Brexit. And obviously the political state in the UK. So we will be launching a number of projects in the UK into 2020. But today I'm going to talk about Leipzig and Porto, starting off with Porto in the Eurozone. So we're going to talk about a little bit about that market. And as I say, it was great that I was there in Portugal earlier in the year to visit Porto and indeed Lisbon. So just before we do that, let's take a step back. Let's look at the currency opportunities. So for our clients in Hong Kong or Singapore or holding US dollars, there's a really good currency opportunity. I've just shared on the screen here over the past couple of years the value in those currencies and indeed the GBP versus the euro. In fact, if we went further back, if we went back, for example, about 10 years, when we compare the Sing dollar to the euro, the Sing dollar's appreciated about 30% over that 10-year period. So for our international investors, aside from the economics of investing in a market, there's a really, really strong currency play for our clients. So let's talk a little bit about Porto. As I mentioned, I was very fortunate to be there in the summer. I sat down there by the water with my colleagues, having some cheese and wine and port after a long day's looking at various projects. It's truly a beautiful city. I took the train up from Lisbon, about 2.5 hours to get to Porto. I would say Porto is very much to Portugal as is Manchester to the UK. It's very much a second city, but it's like Manchester, it's very much a city on the up. And you know, Portugal in particular was hit very, very hard during the financial crisis. But in the last 3 or 4 years, it's really started to strongly rebound. But the key thing is there's absolute value in the market, and that's obviously what our investors are very focused on. So let's just take a step back in terms of Portugal and the actual property market in terms of supply v demand. Well, if you go back to the early 2000s, building regulations were lax, lending was lax, and there was a huge glut of property that really came into the market. When we got to the financial crisis, you know, developers couldn't complete projects, and you know, there was a whole crisis there, and there was a tremendous amount of stock that was unsold, and no one was buying. So fast forward to 2017, 2018, 2019, and what we see is in the last few years, there's been very few projects actually built. That's because planning rules and regulations were a lot tighter, lending rules and regulations were a lot tighter. So there's a lot of the stock has been taken up from the past. There's a lot of buying going on in the market, but there's very little actual projects coming onto the market, to the point where on the last point there in 2017, there was about 10,000 units in the whole country. So absolutely minimal stock coming onto the market. And I actually learned a lot about that when I was in Portugal. I met the banks, I met the lawyers, and they were sharing with me that the market is in a great place in Portugal now because it's very strongly underpinned. And of course, population's growing and lots of people are keen to get into the market now. So let's go into the economy in Portugal. Well, Portugal's got population around about 10 million. The greater area around Porto, there's about a population of 2 million, 230,000 in the city centre. These are some of the key industries. Well, typically it was port wine and tourism before, but if you look at what's going on now, technology is huge, health, energy, environment, mobility. There's lots of different sectors of investment. There's around about 74,000 students in Porto. So it's a young city. These guys are keen to go into some of the new emerging industries, and it's a very vibrant city. And from a transportation perspective, there's lots more commerce coming in from across the city, flights from various quarters. Emirates have just started flying 3 times a week from Dubai. So there's money coming in from lots of different sectors. Some of the main investors are France, the US, UK, and Germany. Okay, so this is quite a nice summary of what's going on in the economy. When we look at the GDP, 1.7% in 2018. In terms of the unemployment rate, it's 7.3%. I mean, that's halved since the height of the financial crisis. The GDP is about 30% for that region. There's about 166 daily flights. There's lots of money going into a new transport, new metro system. And this area of Portugal generates about 40% of all the commerce in the whole of Portugal. So it's a very vibrant economic zone and continuing to grow all the time. So over the past few years, Porto has seen the most foreign direct investment going into it. Half the jobs created have been in this locality, and investment is up by about 300% in recent years. And as I just shared, 40% of Portugal's exports are produced in this region. Very much clearly the second city in Portugal behind Lisbon. So from a transportation perspective, and what I found when I was there was that actually probably the metro system was better than that of Lisbon. It's certainly more modern. It's very vast. You can get right the way across the city, northeast, southwest, very, very easily. In the airport, there's about €1 billion being spent. You can get every which way across the globe because of Portugal's old colonial links. You can get to South America, Africa. You can get to New York in about 6.5 hours. And I took the train from Lisbon to Porto, just over 2.5 hours. Very good service, very efficient indeed. So here's our first project. So literally, we just launched this last week. We had 10 units. We've sold 8 of these already. We've got a couple of new projects planned for the start of the year. This is in the north of the city. It's a location where there are big university hospitals, big universities, a number of employees. It's about sort of 10 minutes to the city centre. The yields are extremely attractive, around about 6%. I mean, probably the highest yields that we've seen on any of our projects. The project completes in Q4 of next year. It's a very high quality developer. Interestingly, we had about well, the building has got 50 units in it. We were hoping to get probably about 25, but we only got 10 because of the extreme strong buying in the local market from locals. So obviously that's a good sign. We would obviously like to have had more units, but we've started off with a number for our clients. And as I say, we're already working on projects 2 and 3. So we've managed to establish some great relationships in Porto with quality developers. And as I say, stay tuned for the new launches that we plan in the new year. So from a pricing point of view, we look to provide all the comparable data in terms of why this particular project, Alvaro, in the north side of the city. So we looked at a whole host of others. We've listed them on the screen there: Esprella Gardens, Costa Cabria, and a couple of others. So in terms of the pricing, the location, you know, we're looking at the rental market, we're looking at the secondary market, we're looking at local transport, etc. Alvaro was the one we plumped for. It's a very high quality building. We can typically get 70% financing for our clients. It's equivalent to freehold property, and as I say, a really high quality developer. And when we're looking at round about the sort of 350 euros per square foot, you know, we think there's exceptional value here, and there'll be good value for our clients over the next few years that we can lock in. Okay, so we're just going to pause for a second, and certainly at the end, you know, if you've got any particular questions, feel free to pass them across. And if we run out of time, of course, I'll come back to you after that. So for Portugal, as I say, we will be planning new opportunities into the start of Jan-Feb in Lisbon and Porto. I'm now going to talk a little bit about Leipzig. For those of you who are not familiar with Leipzig, Leipzig is a city in the eastern side of Germany. It's quite close to Berlin. In fact, it's about an hour away. It used to be very, very industrial. It used to be under the old communist bloc in Eastern Europe. In the last few years, though, there's a tremendous amount of high-level investment that started to go in, and it's really getting on the radar of our international investors now. So Leipzig, as I say, if you look on the map there, it's a little bit south of Berlin. The city itself, when you look at from an infrastructure point of view, when you look at the railway network, you start to see why corporates are keen to move here. I mean, with the growth of Berlin, with the commercial infrastructure of Berlin, you know, it's very attractive for other corporates to put their offices here, sub-offices here, because it's an hour away from Berlin. There's lots and lots of commercial premises that are considerably cheaper than Berlin. There's a high-level master plan that's going on in Leipzig, encouraging corporates to come here. They have what they call a Plan 2030, and lots of different industries are starting to move in. But from a railway network point of view, you can get every which way from Leipzig. You can get from Hamburg in the north, down to Munich in the south, down to Paris, Frankfurt, all the key locations. And then it's also true from the airport side. So Leipzig has the second busiest cargo airport in the whole of Germany, behind Frankfurt. It's actually DHL's aviation hub. As I was sharing, it's about 70 minutes from Berlin by train. And as I say, it makes it very attractive for companies to export goods from the Leipzig airport and get every which way. I think there's about 80, 90 flights per day. There's about 800 million actually being spent on the airport now as well, to grow the commercial side. There's actually a really good report that has actually just been published on Leipzig, and as I say, if anyone would like that after the webinar, do drop me a line, I can send it to you. It's lots of detail, but it really shares with you the high-level planning that's going on. So aside from all the economics, it's actually a very attractive place to live. You know, if you tried to get a pint for under probably €8 in Singapore or Hong Kong, you'd do well. In Leipzig, it costs €4. The cost of living is very good. It's very green, very good transport network, you know, trams, buses, easy to get around the city, lots of culture, lots of museums, lots of nice libraries, lots of old buildings, and indeed, something I didn't realise is tourism numbers are up significantly over the last couple of years for Leipzig. It's really becoming a strong tourist destination in Germany as well. So from a population perspective, it's actually the fastest growing city in Germany currently. The population by 2030 will match that of Frankfurt. It's significantly increasing. Unemployment has rapidly gone down from 22% to around about 6% in the past few years, and employment opportunities are up. Education-wise, there's about 40,000 students there. Probably the most famous student is Angela Merkel. As I said, there's a very, very big student sector there. And again, the young folk, when they graduate, a lot of them are going into tech industries. There's about 250 tech startups in Leipzig now. So it's becoming a mini tech hub at this precise moment. So let's have a look at what businesses are in Leipzig. So most recently, Porsche, BMW have increased headcount significantly. As I mentioned, we've got DHL there, we've got PwC, we've got KPMG, we've got Amazon, who have recently significantly increased their number of staff in Leipzig. Commerzbank, Ernst & Young. There's actually a number of international campuses as well that have put big university campuses there. University of Lancaster from the UK has just put a big campus into Leipzig as well. So it's growing tremendously all the time. And if you look at the size of the economy, this is quite interesting, that the fact that Berlin is pretty much the biggest economy in Germany. Leipzig is way down in 17th. However, the GDP per capita is very, very similar to Berlin. So there's a lot of wealth creation going on the ground, and we believe that, you know, Leipzig will rapidly move up this table in the years to come. So in terms of the actual housing market, so if you go back a few years ago, the vacancy rate was around about 10%. So empty property in Leipzig, around about 10%. It's come down significantly in the past few years to about 3%. Leipzig has only actually had 12,000 homes built in the last 10 years, yet needs 60,000 over the next 10 years. So there's no way that that number is going to be met. And indeed, there was only 1,000 apartments built in 2016. So there is considerable undersupply. We've talked about the fact that the employment ratio is growing significantly over the next number of years, where the population will match Frankfurt. So from an investor perspective, there's a great opportunity. And when we share the next slide, you'll kind of get a sense of where Leipzig sits in Germany in terms of the overall pricing. If you look at on the top right there, we've got an idea of the price differential between Berlin and Leipzig, and in terms of the mid-market, the overall average market, and the sort of top prime sector. And there's a significant difference there, but it's only an hour away. It's actually very, very close. And as I say, that's also reflected in commercial costs as well. Commercial costs are considerably cheaper in Leipzig, and obviously in today's world where value is critical, you know, the cost for residential and commercial are certainly being noted now. So this slide shares with you the difference between the financial crisis growth pre and post. So if we look at Munich, Frankfurt, Hamburg, Stuttgart, some of these big cities, obviously pricing has grown quite significantly. But if we go to the bottom, we see the cities of Dresden and Leipzig on the eastern side of Germany, you know, about a quarter of those in Munich and Frankfurt. So very, very good value indeed. And as I say, it's really because of the economic growth that we're seeing now, this Plan 2030, lots of different industries starting to move in, is why Leipzig is coming onto the thought process of investors now, because it's definitely a market that we see picking up significantly in the next few years. And we really see it as a sort of a groundbreaking opportunity. And there is no one else actually doing Leipzig right now. And when I talk to my clients, my German clients, they are very, very keen on Leipzig. In fact, a number of them have been investing in Leipzig for a number of years, and they're really keen to make further investments because they still see it very early in the cycle, from going from an old sort of manufacturing-based city to new service industries, new industries, creative industries, tech, media, etc., etc. So just another slide in terms of rents. So again, if you go from Munich at the top and Frankfurt, you know, you start to see the massive differential all the way down to Dresden and Leipzig in terms of rents. So again, you know, property prices are cheap, rents are cheap, and as I say, that's really part of the value proposition we see.